Hello, welcome to a JS Desktop Strategy Recap. Today we're going to go over a classic market state, neutral digestion, and more specifically, a neutral digestion market state with sentiment balanced. Neutral digestion is a non-trend general market state type. It is the most sideways state that we have. And when sentiment is balanced, it presents a unique condition for this market state. Any neutral digestion market state has a sideways expectation. The market is coiling and digesting and preparing to transition into a new market state. This market state is a precursor to a breakout, so it's either going to digest or it's going to bust out. And when structure is balanced in the middle, that's the tell that we may be in for a breakout. The market's either going to really tighten its coil and digest around this R level, or it's going to be a breakout. And so typically a fade strategy is going to work if the market opens up away from sentiment, up or down, and we get an exhausted, we fade momentum into the extremes, anticipating this market to digest. So maybe the market the day before had a positive surge, and then it opens up firm and it comes into our resistance, and we're going to fade momentum anticipating a digestion. Same with the bottom. If we open up lower and we're pressing this first, we'd expect a fade. If the market opens up around sentiment, especially if it's coiled a little bit overnight or in any of the early trading activity, that's the kind of prelude to the breakout. The market is finding its balance, it's winding up, and then it's going to go. And it's going to go with a breakout from this R level, which at the directional. And so we're going to look for tells for the market to start to build momentum, to build structure. And keeping it simple, we're looking for, in the case of positive structure, higher move highs, higher move lows, and we're expecting the market to just build this momentum. So after it breaks out of the R level zone, we'd anticipate it to hold structure. And if it does do that, we want to clue into that we're in this theme, and we don't want to step in front of it. And so this is a state where we can use some moving averages, and that's identified here in our commentary. A simple moving average is a great tool to use to identify a possible breakout. Any market that has the R level equal to the directional is poised for this opportunity. Today we're going to take a look at the British pound. But if we just scan the markets, we see that the Russell is in this same state. We have the long gilt in the same state, the Bund in the same state. All these markets are showing the same market state condition and the same structure of that condition. I always like to look at the big macro picture first. So take a look at the structure on a daily chart to get a kind of a sense of where we're at. And the market had a positive bounce in the prior session. So this is actually a positive technical signal where you have a new move low, higher close. So you had this positive momentum the market's building. Then we had two sharp lower sessions, and then we go lower and close higher on the third session. So this is somewhat of a positive signal, and that market is closing just at the R level at 142.13. It's nice to have price structure and market structure in alignment, so we can see that yesterday's high is coming in within the variance of the upside pivot. So if the market was going to fade in front of that figure, it would make sense to have a lower high above yesterday's high. And also we can see that our support pivot, if this is going to turn into a coil or a digestive action, is matching up with these lows here, and we'd anticipate this thing to coil within this zone. So here we're taking a look at the overnight. So here's the action, coming right after the session close, and we can see that the market traded above the CR plus, and it traded down to the R level variance. Every market structure level has a variance and an alert distance associated with it. So the variance is really the optimal area to accept signals, and the alert distance is not only a signal acceptance zone, but it also shows the bias of the figure. So if the market prints above this alert distance, it's given the R level, in this example, a positive tone, and if it fails below it, it's going to be more on the negative side. So we can use it as a conditional alert to an opportunity, and we can use it to also identify a breakout. So in the breakout scenario, we would have the market start on one side of the R level and move to the opposite side of the R level and break out. In a fade situation, we want to see the market stay in front of the figure and then press in ideally to the variance, and then that's our entry opportunity. And on a reversal, we're going to have the market, we'll start above it, go below it, and then give us this reversal signal, and we'll look to enter at the alert distance or at the variance. The market's constantly telling us what it wants to do. Viewing this price action, we can see that the market did make a play for this upside pivot area, but it failed. The fact that it traded above here is a sign of strength. The CR plus is part of the critical range. All this information can be accessed via the help menu. So the critical range is defined with the upside pivot, the downside pivot. We have the directional and the midpoint, which is the R level today. It's a rotational number. And the CR plus is an interesting level because if the market is going to coil and tighten the coil of a neutral digestion market state, typically it'll contain the market. It'll contain the price action. And that's a good tell that we're going to have a rotational day, a sideways day, a tightening of the coil. If we get a breach of that level, it can be a tell that the market wants to move higher and at least make a play for this upside pivot area. Sometimes it'll breach it and just go. Other times it'll pull back to the figure. And that's somewhat dependent on the market state, but every day, every session is different. But the fact is they make this tell first. And that's what they've done in the pound today. So as we're set to start the European session, we can see that the market did try to press higher. It couldn't, it rejected. This is a positive sign. We're above sentiment. It's more likely that we're not going to have a rotational day. This is a kind of a good tell. We could fail here and it would be more aggressive to the downside because this was a kind of a head fake and we'd anticipate the market to make a play for that downside pivot and maybe bottom out above it. Or if we stabilize here, we could see this more as a fade. We could see the hedge strategy theme start to come into play. We start to move forward, the European opening, and the market comes down to our variance. So we come right down to the variance metric above the directional. This is our area of signal acceptance for buying. And at this point, the market is confirming a positive signal. So we have a buy opportunity here, and then we get a breach here confirming this positive momentum. I like to use some simple moving averages. I'm always looking for, especially in this market state and structure, you're looking for that linear event. And an easy way to spot a linear event is with a moving average. If the market starts to hold the moving averages, that's a bit of a tell to have you back off at any fading of this momentum, as well as watching price structure. And we're going to monitor the market making higher move highs, higher move lows, and we're just going to trace it. Now when we talk about this structure, I want to be real clear, real straightforward. Higher move highs, higher move lows defines the structure. The tighter they hold that, the more powerful your expectation. If they break the first structure point, a lot of times that's a tap on the brakes. It may just be a pause for a few minutes, few hours. It could derail the whole thing. Every time's a little different, but it's just a pause. And what it tells us is it takes our expectation of that linear move back. If it's really going to go, it's just going to go. And if you get a little pause, that's a tell that you might want to scale the expectations back on the move. If we get a second structure break, it's discounting this momentum. Not that it can't re-engage itself, but there's an issue and it's going to take a while to resolve it. So we're always looking for textbook moves. We're looking for the market to have a really pretty picture, and as long as it does, we're not going to think, we're not going to stand in front of it, we're going to roll with it. We want to get on the train. So we're always trying to identify what's the theme, At this point, the market is moving away from the directional. That's at one tell that we might be in for a breakout, because breakout moves start from sentiment. They've tested it. The market broke out and is starting to hold positive price structure, and now we're challenging the upside pivot. And as we move forward, we see the market continue to hold this positive price structure, and here we have another tell. If the market was going to fade and reject, any fade is going to fade in front of the figure. That's by definition what a fade is. And you expect a lower price point here in front of the upside pivot to fade with a rejection. At this point, the market's telling us that this fade is no longer true. And so it forces us to look here at this theme, that this theme may be engaging. And if we're engaging, we're here. And if we're breaking out, we know we have this market is in a coil situation, and this is a breakout. And we know anytime we get a breakout of the critical range, anytime we get a breakout of this critical range, we're anticipating a two-segment move, up or down. So to the UT2 is our objective. UT1 is our minimum expectation, but this is our objective. UT3 is our best case scenario. So for the pound, we're anticipating a move up to 145.22. It's two segments. So two segment move. One APMD, two APMDs. And we're going to keep it real simple. As long as the market's holding positive price structure, that's our story and we're sticking to it, and we can use some simple moving averages to help guide us. The minor levels, you can use those as kind of climbing a ladder. So we're looking for alignment with price action and market structure. And then indicators are kind of the third thing. So the most important thing is market structure. Is the market climbing the ladder? Yes. It's starting to climb this market structure ladder. Is price action forming positive structure? Yes. We're making higher move lows. We have clarity that the market is in this hedge strategy theme. And here it's confirmed. We breached this metric. So at this point, we have high confidence that we're at least coming up to 144.22, but we have trade vision that we have the potential to go up to 145.22. And we're going to just follow price action. As long as we're making higher move highs, higher move lows, that's our story. We're sticking to it. We have our trade vision. The market's in transition. We can use, as the market breaches this area here, it's telling it this is a positive signal. We would anticipate it to stabilize here. So this would be a first structure break of the market structure, and this would be the second structure break. Price action wise, we have a higher high, and we have a pause here. And our second low is here of this aggressive positive momentum. So this action is normal. So this is a half APMD move. You get a market that breaches this, and this is a tell that we're going to have a little more of a correction. It takes this aggressive buying on a pause. And where do we expect it to go? Back into this zone. This is our buy zone, ideally off this variance. And we have some price structure that's in alignment with market structure. If the market's really good, it's going to stabilize on this alert distance. It's not going to press into this. And so here we get a confirmation, and we get a new higher high. So now we can ratchet up, and we have price structure here. So this area is now a good market structure point to buy off of. We're just climbing the ladder, and they give us an opportunity. And here the market attains our initial target. When the market's coming into these areas, and we've defined we're in transition, we're in trend mode, we're riding positive structure. As it comes into a structure point, we can anticipate reactions. And what do we anticipate? Well, we could easily get a half APMD move. Do we want to work our position? Do we not? If you're trading here and you're trading at these levels, you know that this is the confirmation. So to take something off and then to put it back on makes sense. Also, you want to take into account what's my expectation. It's 145.22, and base your position management on what your trade vision is. Here the market gives us another opportunity to engage, and we have our price structure here is a defined point for our risk management, and we get the market coming into our averages. No thinking, just watching price action within market structure, and the market pays us. It gives us this money. We didn't have to think. It's holding structure. We just ratchet up our structure. That's our story. We're sticking to it. We've identified the theme. We're riding the theme. So now we've got a market that breaches this metric. For an aggressive trail stop, we can ratchet them up right to here. We want to take profits on profit surges. We don't want to be getting stopped out on pullbacks. We'd rather re-engage and get back into this trend. This theme's in play. We're climbing the ladder. Even if we had the market break down 2 ladders, this is our second structure break point. We're all good above here. They may not give it to us, but we need to monitor our risk management based on that. You can see them, coming into the averages, just working momentum, and you can take a look at the impulses and use these reactions and use those as kind of guidelines to potential setbacks. In a trend, and especially an accelerating trend, those setbacks will get tighter and tighter, and the thing will just scale. And if you have a little symmetry there, it's a sign of strength. Again, coming back into the moving averages, but still maintaining this price structure low. Again, it's just real. As the market's squeezing you here, you're not fearful. You know where you're wrong. You know where there's going to be a change. You're really wrong below this market structure point. You've got a price structure point here, and then as the market starts to stabilize on this metric, it's giving you more definition, and your expectation is the market's at least coming to here. And we come in later in the afternoon, and things start to settle down, and we don't get that full follow through attaining our target. And we have a classic scenario for the DIR equal to the R level in a neutral digestion state. Typically we're either going to start from below and have a breakout, which would give us sometimes more energy. This one broke out above our CR plus level, giving us the tell, and this was more of a pullback to this real support. So anyone that was looking at this action here as these support lows, these are kind of false lows. This is really where the market structure was. So that's also an interesting tell where the market starts to build up, gives you a positive signal, and these buyers get sucked in, and they're putting their stops below these lows, but the real structure's below the market. So that's kind of a classic setup. And then once the market starts to confirm that it wants to go higher, when do you have clarity? Do you have it here? Did you have it here? Because that's sentiment. Do you get it here? Or do you get it here? At this point, it's undeniable that we're in this theme. And at this point, we still have the trade vision of 2 APMDs. And at this point, the market held positive, positive price structure and attained that target. Again, this is the signal acceptance zones. And as soon as the market approaches those levels, especially if you're looking for a target, this is your initial exit. And if you're spreading your orders, you're spreading within this zone to the variance because you're anticipating reactions. So let's quickly take a look at the Russell 2000, which is in this identical market state, neutral digestion. It has identical structure, R level equal to the directional, so it's going to have the identical strategies. We're looking for the same thing. With the Russell overnight, we had that rotational trade that we looked at before. So when we look at the critical range and we're anticipating a digestive trade, anytime the R level is equal to the directional, this happens. They'll rotate, because what are they doing? They're in neutral digestion, and R level balance means that they're on the fence, and they're going to consolidate, and they're going to rotate, and they're going to tighten that coil and wind up before they bust out. And so this is typical action to look for. And one of the tells that we're having this type of action is the market starts, stabilizes around those inflection points. So this 7180 level is the CR plus, and then 6130 is that other interior CR minus. And we see overnight this rotational trade around the 6620 directional R level. And then as we come into the regular session, we have that violent action around it, which is normal. You have the big rotation and then micro just winding up, and then the market makes a move. I added the variance metrics here in this chart, and you can hear as the market had this violent action, coiling, and on the regular session open, and then we get a breakout and a new take out this high, and then here we're getting clarity. Here we have clarity that we're in this theme. This was easily defined here when the market did this. When it stabilized here, found support here, it told us that it was coiling. It told us it was in that wind-up mode. And then in the opening, we really just dialed in right to the point. So we can even draw some trend lines here as this market's winding up to give some clarity. And as we see, just simple tools. We're looking for watching price action within market structure, and we have a market metric here, and here the market breaches it at our structure point. Gives us a pullback to our variance and sparks this breakout trade. So as we're coming into the upside pivot, we're already focused on this fact that this hedge strategy is engaged. And we're looking at how can we get on this train. Just when we come in and we see that the Russell our level is in neutral, non-trend market state in neutral, our level is equal to the directional. We're anticipating this thing has the potential to have an event day, a breakout day. And then when we see it performing the expectation and coiling overnight within the interiors, and then we have this wind up, it gives us that confidence to get on that theme. And then we have that clarity here, and they give us a breach. They tell us it wants to go higher, and they give us an opportunity to enter. And when we look at this, we have this price structure low here to work off of. Now we're just focused on this low as our point, and we're working positive structure. That's our story. We're sticking to it. We just keep it really simple. If it's going to go, it's just going to hold positive price structure. If you have a market that's coming into the upside pivot, you want to clue into what theme you're in. That's so important because then it discounts this. Here we can use a simple moving average. Again, a great tool. As the market's coming here, and you may, if you miss this move, you're going to be more apt to sell it here, which is an error. To help you avoid making an error, focus on the facts. Is the market holding positive price structure? Yes, it is. Is it holding above simple moving average? Yes, it is. That's two strikes against executing a fade. And it allows you to get you clued into this opportunity. Absolutely, we could have a reaction here and a pullback to the price. So if you didn't clue into this violation of higher highs here and get into this, and you're coming here, you have to wait for a breakdown to this level or have a violation. And so they give it to you, and here they come up and you take out the CRX plus. Market's telling us it wants to go higher. They give us, but they don't do it right away. They give us a pullback, and they give us a pullback to our price structure. So here's a little more granularity in that. But I'd love to see this happen when you have. Again, we're always watching price action within market structure. So you have this price structure here that's in alignment with our upside pivot. And that's where the pull, and so as the market's pulling back, you can define your risk. And look at this risk reward opportunity. Your risk is defined here. The market's in this theme. The market has been holding positive price structure, and it's holding a moving average. My expectations of a breakout above the upside pivot are at least one APMD, if not two APMDs, up to 1098.20. And from this, and this was real clarity here because you had additional tell here and here. And it all started out with the macro picture of what's the bigger state macro theme. And you can see how the market just continued to hold positive price structure and climb the ladder. You're always expecting the market to look pretty. You're always expecting the market to hold that structure, and if it doesn't, it's a tell. It should hold positive price structure and market structure. It's really a keep it simple method here. Focus on monitoring price action within market structure in the context of the market state, in line with the underlying strategy themes. For more information, please contact us at info@jsservices.com. If you're not already a subscriber, come to jsservices.trade and request a demo. I look forward to working with you.